Spartans! What is your profession?
Howdy folks, Mark Heworth here from Flipside Trading, and today we're going to review the trades from the week of March the 2nd. And we're going to really focus on the theme of taking the emotion out of the equation. Well, first of all, you got to take a look that we're still just ripping it, right? We have a lot of volatility in the market, but yet we cranked up, $1,650 in premium, for the week. Even though we had a losing trade up here in the SPX, we're still able to overcome that by taking advantage of the volatility and the heavy premium. The key thing is we really want to take a look at how do you take emotion out of the equation, what it's really like to have a trading plan or follow your trading plan, and how it's going to save you not only from fear but also from greed. Okay, without further ado, let's go ahead and get started on that. All right, our first trade we're going to look at is Amazon. What we did is we had a put credit spread here at 14.75. This was our short strike limit. We placed this back on the 27th. We were kind of up and moving. You could see that we had a big gap up, which really kept us on a bullish area. So what we did is we took credit for that at 60 cents, and we used our 50% rule to go ahead and set a good to cancel order at half of that, and actually a little more than half to cover for commission structure, so at 25 cents. And sure enough, the next day we came here, we popped up right in this area here, and boom, we're out of the trade. You don't think about it's like, oh man, I wish I would have held on, I would have taken it all the way to zero. I would have had $600 instead of $550. Well, the reason is look what happened. We had this, the market doesn't wait and has no idea what your plans are, but it started just dropping straight down. Here we are, as we move down here, even in this area, our P&L starts going into the minus 1,000, 2,000 time frame. We come all the way underneath, okay, and we pull back up, and there's a little respite. So if you did hold on to this trade, maybe you got out here, but if you didn't, the next day you're jammed underneath. You're 60, 70 points. Down, you're 30 points below your short strike. I mean, it is just a pure miracle that it came back up, and closed above. So it is much better to, forget about the anguish, close out, follow your rules, and make things happen. Next thing we're going to take a look at the same way, right? That's kind of the greed thing, right? Don't be greedy. Follow your rules. Get out when you say you should get out. Use your 50% rule. Good to cancel order. Next thing we'll take a look at is the S&P 500. This is our losing trade. Now, here we are. We're on Wednesday. We're looking to carry it through for a couple days. It's kind of bouncing here, but it looked like we closed the gap, and that gap is right here. So once we closed the gap, we saw a bounce, which indicated that we had a bullish inclination, and so therefore we wanted to set a put credit spread here down at 26.90, which gave us about an 85% probability. Well, unfortunately, we went at the end of the first day here, all of a sudden, wham, we came slamming down. We're at 27.05. At that point in time, we're kind of on the edge as far as our P&L is probably about minus 600 or 700. It started moving back up, but you can just see that with the news on the trade tariffs and everything else. We actually had this line here. Let's just put it, you can see kind of this way, right there. So when we started cutting through that, as like, this thing, we look at momentum, we have this whole idea of lower lows, lower highs. It's moving down here this way. You see it's right, you got lower low, lower high. I just had the feeling this is coming down. So you know what? We broke that. It really got to our level about, between 2 and 3 times the max profit, and we got out. Again, we got out for a loss of $750, but it saved us the anguish. We dropped all the way down here. We would have had basically about a $4,700 loss, at this point in time. That was our max loss. We saved ourselves basically, over $4,000. Now again, look what happened. We gapped back down, and miraculously, the market, because everyone was so short, the put call ratio was so high, that they short squeezed them here and ran everything back up to go ahead and shake all those loose hands out on the shorts. But you can never expect that you're going to get saved here on the last day. Follow your rules. Don't worry about the fear. Don't have hope as a plan. Get out. Because as you can see, if you get out and you manage your losses small, we still made over $1,600 for the for the week. And the last trade is actually, it's called, you see here, it'll come up, it'll say booking, but it's actually Priceline. Now, whoever was the marketing genius that decided to make this a change Priceline to booking, I have no idea why they decided to do that. But here we go. They had earnings. It popped up over 100 points. I read the earnings and the fundamentals, and even though they had great numbers that beat their forecasts and their overall quarter-to-quarter rate of acceleration was decreasing. So they definitely deserved some kudos, which was a result of the hire, but it wasn't going to go another 200 points higher. So therefore, we set a call spread. We took advantage of the volatility of that day up here at 21.15. So here we are, we got 2 days out. The 50% rule applies. We took in 80 cents worth of credit. So I sent a good to cancel order at 30 cents. Well, sure, from here, and we, just dropped in a hailstorm, just, got ripped right out. This is, about, 35 points. And basically, the credit spread registered max profit, i.e. it was actually showing instead of 0, it was showing minus 15%. Even though it was showing minus 15 cents and I had a good to cancel limit at 30, the market makers just wouldn't let me out. That's a little bit of Priceline, but it's a little bit their own stupidity. Well, now it became for me a matter of principle. I said I'm just going to watch this thing like a hawk, and I'm just going to screw the market makers because they were trying to screw me. So I held this one all the way to 0. Probably not the smartest thing in the world, but again, it was a matter of principle of me and the market makers versus the market being right versus me being right. Anyway, that's the key. Please follow your plan. Be really strict with your stop limits. It's all about managing the trade. Placing the trade is easy. It's keeping emotions and fear and greed out of it. Knowing where your targets are on when to get out. Knowing your targets are on when to take profits. And if you do that, you'll be consistent. If you're consistent, be profitable. If you're profitable, you're really going to enjoy life. All right, that's all for this week. Have a great weekend. Catch you on the flip side.